Another good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain, and for now, the market is in fine fettle, especially if you're looking at the Bank Nifty, because that's gaining over 1,000 points as we speak. So that's the space which has seen the biggest amount of rally right now, and that's zoomed to the record high level. So Bank Nifty clearly in focus. A lot of individual movers within the Bank Nifty. Take a look at Axis Bank. That's sitting at record high levels. ICICI Bank has managed to hit the market capitalization of 8 lakh crores after the numbers came in better than expectation. And SBI too continues its march toward that 4-digit mark right now at the record high level of around 830 as far as SBI is concerned. We are seeing a big move on India Wix as well, so that's managed to surge around 12%. It's comparatively a slower week when it comes to earnings. It's a truncated week. However, the big event lined up for the week is the Fed meeting. Ahead of that, we are seeing a bit of a volatility in the market. Broader markets have cooled off a bit. So if you look at the small cap index, it's pretty much flattened out from where it started the day, even mid-cap for that matter. In terms of indices and the sectors, it's real estate, auto as well as FMCG, which is a bit of a drag right now. But other than that, clearly all the banking names is what deserves mention, because great amount of momentum as far as Bank Nifty goes. Even if Nifty is just pretty much around 22,600 level, it's the Bank Nifty which is showing quite a bit of traction right now, Aisha.
Oh, yeah, absolutely. It's banks and more banks which are holding out. But just, a little bit about the liquid end of the universe. While, of course, it's ICICI Bank and SBI which are leading on the index and contributing maximum to today's gain, AB Capital, that's seen a stellar follow-through from the last fortnight, another 4% higher for this one. Some of the OMCs ahead of their numbers, they're doing very well. HPCL being a case in point, that's holding up 3.5% as we speak. Chemicals definitely are coming back to the fore. We saw a color of that last week as well. Naveen Fluorine jumps up 3.5% right now. And Balrampur Chini as well is looking sweet with 3.5% gain. Of course, this KPIT Tech as well, wherein the FY25 guidance is something that the street has liked. Anisha will, of course, throw more light perhaps on those numbers. And the EBITDA margins as well have gone down well with the street. BSE, of course, it's recovered a little bit from the opening gap down that you had in the stock. But brokerages are not quite impressed with this move. Jefferies has downgraded, in fact, to a hold target price at 2,900. IFL Securities as well, a target price cut now to 2,550. And Investec has put it under review as of now. So just very quickly, it's a good scorecard from the banks. ICICI Bank holding out well. We will just have that scorecard come off for you on your screen. Supreme Industries as well, a decent set, but not quite the same with SBI cards, or for that matter, even from an HCL Technologies. But I think we can take it across to Kunal as well as Nuresh and analyze what the market texture is looking like. Nuresh, today, of course, it's kudos to ICICI Bank, SBI, pulling it up after its numbers and reflecting on the index right now, 22,700 on the futures.
So finally, a new all-time high for the Bank Nifty. And even now, it is only the heavyweight like HDFC Bank and Kotak Bank which has not caught up. But if you look at the three other top names, we've hit a new all-time high with a fresh breakout. So whether it is SBI, Axis, or ICICI, the leadership is clear. This is the trio which can take the Nifty and the Bank Nifty higher. Now, for the Nifty, what we need is the other heavyweight, which is Reliance Industries, to actually start pulling up, and that looks pretty positive. So the structure is positive on the index as such. Today, given that the index has moved up quite a bit, you are seeing a lackluster move on the mid-cap and the small-cap indices. But they've done really well over the last few weeks. So time for large caps to take some momentum in the near term.
Expected to gain traction and momentum, that's the word coming in. But Kunal, are you surprised by the ferocity of the move on the Nifty Bank? And what do you make of this another surge on India Wix? It's now again up 12% today.
No, not surprised, but relieved. I think finally it's happened that the Bank Nifty started to participate. I think we were all waiting out for the likes of ICICI Bank, Axis Bank to start outperforming, or at least show that stability which was missing in the private sector banking names. Because you look at the other end of the banking, banking stocks, the likes of Kotak Bank, HDFC Bank, etc. IndusInd Bank also added to that kitty. I think these three stocks are still languishing closer to the previous swing lows, and they're still quite a distance away from their 52-week highs and lifetime highs, as the case may be. So I think it was time that the heavyweights, the other two heavyweights, did that participation. And I think it's a good sign that it has happened on the back of or on a day where the bank Nifty also managed to make a new high for themselves. I would now believe that this move on ICICI Bank and Axis Bank would probably continue for at least another few weeks. The momentum which we've seen carry forward for many of the stocks which have head towards a breakout or given a breakout for themselves in different variety sectors. So I would probably believe that we are now at a cusp where these stocks should gain up at least another 5 to 7%.
Right. Okay, that's the take coming in on what the Nifty Bank is going to do, and it's an equally, lively, broader market as well. We were just highlighting Naveen Fluorine, Balram Puccini, HPCL, AB Capital. All these names as well are holding out very well. At the same time, a weakness in IDFC First hasn't resurrected after its weak numbers. That's down still 4.5%. SBI Card after its numbers 4.6% lower, and then Apollo Hospitals as well after that deal. That's also down nearly about 5% as we speak, as is HCL Technologies, like I earlier highlighted. That's also weak by about almost 6%. Kunal, after these numbers, and I think Tech Mahindra was perhaps the only exception here, is it established now that IT is a space to ignore and the weakness there and underperformance there is going to continue for the next foreseeable future?
Yeah, it seems like that the large cap IT stocks have still not found a major bottom for themselves. So, you may have one or two outliers in a sector which is trying to grapple through the short-term issues. But then, that's not a clear indication of how the sector trend is. So when you have stocks like TCS, which is now struggling to even break past about that 3950, 4000 odd levels. Infosys, I think, has been languishing at the 1430, 1440 mark for quite some time. Wipro, again, sub 500 levels. So when you have 3-4 top heavyweight stocks in the sector, which are still showing signs of underperformance, that's clear indication that the sector has not found any major bottom for itself. Now, there are two aspects which one could do. So, like what we saw for a phase where the private sector banking stocks were underperforming in the last, 1 year or so. It's a good time to try and go for a staggered buying in the IT stocks at current levels. But the only question is that one has to be patient enough and wait out for at least another 3 to 4 quarters for these stocks to really show signs of bottoming out as well as start of an uptrend.
Okay, that's the take coming in on what the IT pack is up to. Let's just take stock of some of the other names as well. Look at Kotak. That's actually seeing a good recovery after the drubbing that it took on Friday and that opening strength which also got sold into. Naresh, how meaningful does it look? The rebound in Kotak, of course, it got a long way to, to go before it undoes all the damage from Thursday and Friday's price action.
So after such a gap down with very large volumes, one is better off just waiting. And say the stock to first needs to find the base around the 1600 mark. If you look at pre-COVID, the stock used to trade at 1650 levels. The top was around 1750. So the stock is back to 2019 prices, 5 years of almost zero return. For the last 3 years, the low was around 1650. We are trading below those levels. So technically, it does not look promising as of now. So any bounce back towards 1700, the gap down would continue to face resistance. So expectation is the stock could be grinding lower or maybe find a range at 1550 to 1700. So not looking out for a buy here. Even not really a short also, given that the stock has already moved down quite a bit over the last 3 months.
Okay. Shortly, in fact, we're going to take stock of what the IT as well as the banking sector after major chunk of the earnings are over and what it actually entails and what it throws up in terms of trends. I think I can take it across to Gaurav and find out what the Q4 banking update has been so far. It's been quite a volatile few weeks with a lot of action based on some of the mixed earnings and very stark news flow as well that we've seen from banks. But Gaurav, what's the takeaway?
Well, yes, talking about Nifty banks, if we look at it, the index has reached its all-time high. And if you look at the result season also, banks have actually reported good set of numbers. In fact, if you look at Axis Bank, it reported numbers which were actually above the street's expectation. And other banks from Nifty, for example, HDFC Bank, IndusInd Bank, the ICICI Bank, they reported inline set of numbers. Now coming to deposit growth, actually the deposit growth outpaced the advances growth in this quarter, which was actually a key concern for the private sector banks that we have seen in 3Q FY24. Advances growth was also strong during during this quarter. And if we talk about asset quality also, we have seen most of the banks reporting gross NPAs and net NPAs going down on a quarter-on-quarter basis. And in fact, if you look at Yes Bank, that reported GNPA and NNPA, which was actually down 30 basis points on a quarter-on-quarter basis. And at the same time, bank reported PAT growth of 124% on a YY basis, which was actually a key point for the bank. Apart from that, let's look at some of the key commentaries that happened in the results. So for example, for HDFC Bank, we saw that the bank reported gain of stake sale of Credit Law worth 7,000 crore rupees, but at the same time, they created provisional buffers, let me just rephrase it, floating buffers of 10,900 crore rupees, because of which we saw there were some issues, which were going on in the bank, were relieved in terms of investors' view. At the same time, balance sheet repair has begun for HDFC Bank because LDR ratio is now down to 104%. Coming to Axis Bank now, in this bank also we had seen that bulk deposit was one of the issues in 3Q, but if we look at 4Q's number, bulk deposit increased almost by 4.8%, but it only contributed 18% of the incremental deposits for the bank versus what we had seen at 86% in Q3, which was actually positive for the bank. Apart from that, we also saw ICICI Bank and IndusInd Bank reporting strong set of numbers. There were some concerns in IndusInd Bank, but management had said that the provisions are actually in line and enough for the bank. So all in all, we saw a good set of numbers coming up from the banking sector, and definitely watching out for all the banks which are going to come in the days ahead as well.
Okay, that's the trend analysis coming in on banks, and shortly we'll have Anisha flag off the trends from within the IT pack as well. A bunch of other names which have been in focus today, and look at iRadar, because that stock really has been holding out well, right after it got the Navratna status. Of course, it's a case study how the stock has actually panned out ever since its listing, or for that matter, the kind of subscription that it got to its IPO itself. We'll discuss that shortly, but Anisha is ready, so let's try and map the trends from within the IT earnings so far. Anisha?
Well, the biggest read-through from the Q4 earnings for the IT sector is that there is still uncertainty about growth. That's the biggest takeaway for me, because while the likes of TCS have said that FY25 is going to be better than FY24, the likes of HCL Tech still believe that FY25 is going to be a challenging year, pretty much similar to what they did in FY24. In fact, that's quite visible as far as the FY25 guidance is concerned as well. Infosys has guided only for a 1 to 3% kind of growth, and this is coming in after a very disappointing FY24 itself. HCL Tech as well, wherein Street was believing there's going to be at least high single-digit growth, maybe 6 to 8%, has only managed to commit to a number of 3 to 5% as of now. And Wipro is expecting as much as a decline in the first quarter to the tune of minus 1.5%. Telling you that there's clearly pressure ahead, and it's only perhaps in the second half of the year that we'll get some clarity. Not just the top line, even the margin is going to be a bit of a problem going forward, because we've already seen expansion in the likes of TCS, etc. in terms of the margins, and that's why there's limited margin lever available for going forward. HCL Tech has kept this margin band pretty much same at 18 to 19%. TCS is said that growth is going to be the lever for margin going forward. And for Infosys as well, the margin band has been maintained at what it was earlier as well. Hiring has also slowed down, and that's been the trend this quarter as well with respect to the kind of decline that we have seen. If you look at the top 4-5 companies, they have, at the congregate level, managed to reduce the headcount by 72,000. So that's the kind of decline that all of these companies have reported. Not just that, if you look at the overall scorecard for quarter 4, it's largely a miss to an inline set of numbers coming in from most of the companies. The constant currency, barring maybe a TCS and HCL Tech, rest of the ITPs have actually reported a decline in constant currency. Most of the companies has reported a decline in margin. A couple have reported an expansion purely because there was no wage hike impact. And even if you look at the TCV, that's one silver lining, that the momentum of TCV has been strong, but overall headcount continues to reduce. There is that growth uncertainty. Valuations aren't necessarily cheap at this point of time. Tells you that perhaps nobody's in a hurry to buy this sector as yet. There is going to be at least 5 to 6 more months of consolidation, and all of that is getting priced in right now.
Okay, Anisha, we'll leave it at that. Thanks for that summary on what to expect from within the IT pack, or what the trends so far have been. We'll take a very quick break. When we come back, we'll have our fundamental experts join in. We'll be in conversation with Prabhakar Kurwa. Bank financial numbers, NII uptick of roughly about 19.5% 0.5%, awaiting more numbers. PAT, of course, is jumped up, but that optically may look higher because it's a relatively smaller base. We can see the stock price reaction coming in there. We've got Prabhakar Kudva as well joining us on the show right now from Samviti Capital. Prabhakar, hi, good afternoon. Welcome to ET Now. Wanted to understand how is it that you're mapping the market construct right now? Many believe that this is the best it'll get this year because you'll have elections, then US elections, etc. What is your prognosis of the market right now?
Yeah, good afternoon. Thank you so much for having me. Yeah, like you said, this year is full of very big events. The first one coming up in the month of June, which is the general election results, and that will be quickly followed by budget, which will the full budget which will come up post the government is elected, and which again will be followed by the US elections. So I think this year is setting up to be an year which will set the tone for the next 2 to 3 years in terms of the direction. We've obviously had a very good last 1 year, in terms of the overall market performance. I'm not sure if a similar year can be repeated, given the the set of events that we have ahead of us. But I do feel that given these 2 or 3 big macro events ahead of us, the results of these events will really go to determine how the next 18 to 24 months are going to be.
Absolutely. But what is the sense then right now? Would you say protect capital, take some chips off the table because the year is so full of big events which may come with their share of volatility?
Yeah, given that we've coming on the back of a great year, I do think it does make sense to take this year a bit more conservatively because the same time last year the valuations were down in the dumps, especially for mid and small caps. We've had a stupendous rally, a very broad-based rally in the last 1 year. Valuations have caught up to a large extent. However, there are a lot of new opportunities opening up. From a broader market point of view, I do feel that one should not expect another great year, followed by what we've had. We should probably be a bit more conservative, but there will be big opportunities within specific sectors, specific pockets.
Point taken. So that's a view coming in as far as the market setup is concerned right now. In the last few minutes, we have seen a bit of a move on Nugent Software as well. So that stock is reacting quite positively. Godrej Industries has been inching higher. KPIT Tech is the stock that I want to discuss right now. Good move of around 7% at a time when rest of the IT companies have languished with a single-digit growth, whether large cap or even mid-cap companies. This company has gone ahead and delivered over 40% growth in FY24. And not just that, in the coming year, they're talking about a growth of anywhere between 18 to 22%. Margin also has been, inched up in terms of the guidance. They're now talking about margin to be above 20.5%. This number in FY24 was 20%. So there is that improvement that they're penciling in, and this is coming in after a heavy base. Naresh, what's the view on KPIT Tech as a stock and even Birlasoft for that matter, because the earnings are expected later today? Would you recommend people to book some profits on the likes of KPIT Tech right now, or better to hold it on?
So it's been a relative outperformer clearly. The problem is after such a rally, the risk reward is not great. And when the sector is not doing well, we could get into a consolidation phase. So the view is we could be getting range bound for KPIT Tech. We're in 1350 on the downside and closer to 1600 on the upside. Could be the range. So it's a stock where you would like to sell on rise rather than at current levels. So any other follow-up towards 1600 odd levels, one could be looking at a sell. Birlasoft similarly has seen a decent enough correction, even though it's been an outperformer. So out here also rise to 750, 770 would be a sell. So the whole IT sector looks like either it could go drift lower or go sideways. So time to be looking at a sell on rise.
Right, okay, that's the take coming in on, some of the constituents of the Nifty. IT, very specific a case. I mean, Tech Mahindra and KPIT, perhaps the only standout ones so far, like Anisha was also flagging off earlier. AB Capital, Kunal, that's a stock that's been on your radar, doing very well. And today as well, there's no stopping this one, another 4% bump up. What next?
It looks attractive. In fact, the entire Aditya Birla group of stocks, I think they've done reasonably well. 37% up so far for AB Capital this month. I think with the volumes and the kind of momentum the stock has shown, I would actually believe that this could be a start of a huge and a big uptrend, because I would sense that the stock today I think has managed to break past about the previous lifetime high levels. This month has been one of the best months in terms of volumes for the stock price. The last time we'd seen such kind of high volume month for AB Capital was, I think, at a point where the stock had moved from 80 to 120, and that was almost like a 1.5 odd year back. So I think the stock is now migrating into that kind of a high territory. I think now from a next 1 to 3 year kind of a time frame, I would look out for targets of anywhere in the range of 350 to 400.
Sure, point taken. Prabhakar, what's your view on BSC? Because, I mean, that stock has taken a tumble of around 14% today. But how much does it undo the fundamental story which was there? I mean, the stock had become, what, 5x in a matter of a year purely because we were talking about a lot more financialization, a lot more people coming into the stock markets. Does that story get undone? Or if not, then one should buy this dip perhaps, right?
Yeah, I think BSC more than the variable being financialization for BSC, it was more a story of the options volume really picking up, because the BSC stock started doing well after the introduction of Sensex options, and subsequently they also introduced the bank variant of the options. So it was the options transactions that was really doing the trick for BSC. I think that continues unabated. I think options volumes have been quite robust. Of course, this notification from SEBI is a one-time hit for BSC and the BSC. And also, more importantly, I think the story for BSC was, the last year's story, whereby a huge re-rating took place on the back of this catalyst, which was the options volume and the subsequent transaction fee from that. I think BSC is now fairly valued. And I think this catalyst of the SEBI, the increase in the fee from SEBI will probably hit the results in the next couple of quarters, and BSC should likely go sideways from here.
Right, okay, that's the take coming in on BSC right now. But Prabhakar, to the point that you were earlier making, that it does make sense to, keep the powder dry, take some chips off the table. Prima facie, what are the sectors which look peaked out to you, or specific cluster of stocks, if you will?
Yeah, like we've been speaking, I think IT is definitely one sector, especially large cap IT, where the numbers clearly have tapered off, except for exceptions like KPIT, which we just spoke about some time back. I think broadly, if you look at the entire IT pack, there seems to be a tapering off in terms of growth. There seems to be pressure on margin, and there is the big impending threat of AI. So how TCS recently announced that a lot of call centers will be replaced by AI. A lot of developers today already are using artificial intelligence tools, which are helping them develop and code much faster. So something that was done by a team of 5 or 6 people can today probably be done by 1 or 2 people. So the impact of that, in terms of how it will hit the services revenue for all of these large cap IT firms is very unclear, and markets does not like uncertainty. So if you combine slowing growth with an uncertainty of how this AI thing will play out, I think IT as a sector will remain subdued. I believe banks, the private sector banks also are, in a similar, of course, ICICI is doing very well today, and Bank Nifty, I think, has hit an all-time high today. But broadly speaking, I think banks and NBFCs also should remain range bound, because this was the, darling of the last bull market. So all of these stocks are over-owned. They are there in all the portfolios. So that huge incremental demand is unlikely to come for both IT as well as banks. So I feel, especially private banks, PSU banks are under-owned, and PSU banks are doing well, and I think they'll continue to do well. I think this private banks and large cap IT is where I will be more cautious.
wanted to address a number of Ultratech for you. It looks like it's a beat when it comes to the profitability because the number has come in at 2,260 crores versus our expectation of less than 2,100 crore rupees. And even in terms of volumes, there's a decent amount of traction as far as volumes is concerned. They've recorded a volume growth of 13% for the entire year FY24, and in Q4 FY24, the volume was double digit at 11%. And the full year EBITDA per ton has been at 1,100 odd rupees. So I'm guessing that's a decent number coming in from Ultratech at this point of time. The total effective capacity utilization was also 98% for the quarter and 85% for the full year. So that tells you that perhaps in the end of the year, there was a bit of an uptick that happened in capacity utilization, probably building in the demand that the company is expecting going forward as well. The capex program is pretty much as per schedule. There doesn't seem to be a big change there. The grey cement capacity is well augmented at around 199.6 million ton as well. The overseas capacity that they've mentioned is also okay. And for going forward, there's just one statement coming in from the company. Demand for cement across all sectors continues to remain robust, which augur well for the company. I know you can't comment, Prabhakar, on the numbers specifically of Ultratech, but overall as a sector, would you be a buyer in cement names or not really?
Yeah, I think cement is a great proxy for infrastructure. I think infrastructure is really taking off in the country. The government is spending, a big chunk of the budget on infrastructure. Whether it is roads, railways, ports, and cement plays a role everywhere. I think cement is definitely a good long-term opportunity, but it is again a sector which should not be played quarter on quarter because there's a lot of seasonality here. There are a lot of geographical, nuances in this sector. But as a basket, I think cement remains a very good proxy for playing the infrastructure theme, which is going to play out over the next 3 to 5 years.
Okay, Prabhakar, we'll let you go on that note. Thanks for taking the time out and joining us today. That's Ultratech reacting to its numbers. AU Bank as well has popped up quite a fair bit. It's about a 4% uptick that you're seeing on the stock. And it's not just HPCL, but even IOC is seeing a bump up of about 3% right now. And L&T Finance as well, which is holding higher by 3.5% as we speak. So good amount of buoyancy in the market right now. Let's take some closing trades on that note. Kunal?
So I think in terms of closing trade, I'll go with ABFRL, a stock which in the last couple of days has moved from 220 to 265, 70 plus mark where it's trading right now. In the last 1 or 2 days, the stock has gone through a bit of a subdued price action. So I would probably believe that over the next couple of days, you could see a very strong momentum. So buy on ABFRL.
Okay, that's a buy call on ABFRL from Kunal. Naresh, what about your closing idea?
So that would be a buy on PNB, Punjab National Bank. The stock has been testing that 138, 138.50 breakout for the last 2 sessions. Stock hitting a new 52-week high, very close to it. Expecting a follow-up given the rally in the whole banking space.
Okay, on that note, let's take a very quick break. It's holding out pretty well for the market. Let's see how the last half an hour pans out and whether the gains sustain.
Welcome back. Well, we are discussing Ultratech's numbers and it looks like it's a beat on most of the parameters because the volume growth has come in better than expectation and it's having an impact on the top line and the profitability as well. Ronald Sioni, the research analyst, is joining us from Sharekhan. Ronald, what's your first takeaway from the earnings? What really stood out as a beat and is there any miss in the numbers as well?
Yeah, hi. Thank you for having me on the show. Yeah, you are right. The Ultratech numbers are a good beat on the overall performance. We had expected around 10% volume growth. So, the 13% volume growth for FY24 and 11% for was better than expectation. So, on the profitability front, still, it's a good beat on our numbers. So overall good numbers. We have also seen ACC and Dalmia Bharat outperforming on the volume front. So same goes for Ultratech as well.
Right. Okay. So Ronald, looking at these numbers right now, what's the call on the stock?
Currently, we have a buy rating on the stock on Ultratech with a price target of 11,900. The only real concern for the sector as a whole and Ultratech in particular is the price correction, cement price corrections we had seen during Q4, which has not reversed during April month, and the exit prices are still flattish to lower than quarter four average. So we would look, for improvement in cement prices or increase in cement prices, which should be a key near-term trigger for cement sector as a whole and Ultratech in particular. But we have a buy rating on Ultratech.
Okay, Ronald, we leave it at that. Thanks for analyzing Ultratech and joining in with that quick take. Stock reacting to its numbers, holding up 3% as we speak right now. But Ansh is here to flag off the other volume buzzers as well in trade. Ansh?
Right, so Vaibhav Global will be the first stock in focus as the stock has actually given a breakout from its rough double bottom chart pattern with volume of over 7 times its average trading volume of last 7 sessions. Also, the stock has surpassed about 50, 100 and 200 DMA today itself. Apart from this, Supreme Industries will also be in focus as the stock has actually given a breakout from its key highs with volume of over 13 times its average trading volume of last 10 sessions, indicating very strong participation in today's breakout. In addition to that, the stock has also touched record high level. Lastly, Balrampur Chini will also be in focus as the stock has actually given a breakout from its cup and handle chart pattern with volume of over 4 times its average volume of 10 sessions, touching 3-month high and snapping 4-month losing streak. So keep an eye on the stocks.
Out on that. But let's pull up the intraday chart of Trent because the numbers are just trickling in and it looks like it's a decent set. There's a bit of a miss on the top line because the number has come in closer to 3100 crores. At least that's the first reading that I have with me for the numbers right now. And otherwise as well, it looks like it's largely inline set of numbers. The stock is tanking as we speak. There's a dip of almost 4%. The consolidated EBITDA has actually come in better than expectation, or at least our expectation, which was just around 370 crores. The EBITDA has come in at 477 crores, and even in terms of profitability, I think the number is very healthy at around 600 odd crores. The expectations weren't that big on the profit figure. The profit figure expectations were actually much lower. So the stock is recovering as we speak, I believe. Kunal, a quick check on the stock price of Trend, and then we'll try and get more details on the numbers as well.
Yeah, so far the stock had done reasonably well. I think from that previous quarterly result update, when the stock moved from 3,000 to 4,000 in a matter of couple of days, I think from there over the last 1.5 odd month, the stock was just grinding itself at higher levels. So I think 4,000 was acting as a fresh base or a support for Trend. It had moved up to 4,400 levels. So I would probably believe that if the stock scales past about the 4,400 mark, then we can probably expect a second round of momentum. But I think looking at the charts in the recent last 2 months of price data, I would actually expect the stock to just about consolidate into this band of 4,000 to 4,400.
Okay, just wanted to highlight there's an exceptional income of 576 crores. So that PAT is looking much bigger than expectation at 654 crores. On a year-on-year basis, it's very strong. But there's an exceptional item there that I'm looking at, a 576 crore exceptional item. That might change the texture of the earnings, because otherwise the expectation was around 350 crore thereabouts in terms of profitability. It's actually coming at 650 crores. That exceptional is something that we need to highlight very prominently, because that's the reason we are seeing a big beat on earnings. 576 crores as far as the consolidated earnings is concerned as well. We'll wait by and get more details, and we'll perhaps get our research team also to join us with that. Quickly trying to read as to what that exceptional is. It seems like that the company has reassessed the estimates of the useful life of some of their assets, and that's why there has been a bit of a reversal as far as depreciation is concerned, or some adjustment on account of that. We'll track that, but Kunj Bansal is also joining us on the show. Kunj, what's your take on Trend? That stock has been a very good wealth generator. As Kunal was highlighting, last time earnings was a big re-rating factor. This time it's a bit skittish. What's your view on the stock as a whole?
So before going on to the stock, if we look at the overall retail sector performance, we clearly have been seeing a lot of stress in the demand, and that is also reflected in the pre-quarterly updates that most of the FMCG companies have given. The retail sector as a whole has been having mixed performance. Some of the companies are doing very well, and some of them have not been able to cope with this overall slowdown led by the inflation increase that has been happening in the market. At this point of time in the market, when we are close to life highs, result season is on. On the other side, if we look at the macroeconomic, the crude price has been going up. So that's a negative for an oil import dependent country like us. So it's very typically difficult to take a risk reward balanced call as to which sectors and which stocks one has to take a view on.
Okay, that's that on the market and of course Trent. There's a bonus also which has been a one-time gain of 543 crore rupees and a dividend as well which has been announced. But we'll analyze those numbers. The stock has completely recovered that 4% crack that it saw as soon as the first flash came in. We'll analyze those numbers in just a bit after this very quick break.
Welcome back. Well, Trent continues to inch higher. Now, we did highlight that on the bottom line, the beat is led by a one-time exceptional gain. But even if you look at the operational front, there is an improvement there. So the revenue has jumped up year on year by 54% and the margins have improved to 15% versus 10%. And I think that partly explains the kind of move that we are witnessing on the stock. But clearly, it's marred by a lot of one-offs. So we'll try and decode all of that and see at the end of it, how do the numbers stack up versus the expectations as well. But in terms of the other big movers right now, you have Supreme Industries, which has been doing quite well. AU Small Finance Bank continues to gain traction. You, of course, have the likes of Aegis Logistics, Tejas Networks, which have been doing quite well. And then KPIT Tech on account of that strong guidance. In fact, AU Small Finance Bank has now managed to inch up by 7%. Kunj, what do you make of this entire RBI, directive coming in to facilitate the movement from Small Finance Bank to the Universal Bank? And how do you think it will benefit the likes of AU Small Finance Bank?
So growth of any entity in a sector is a continuous process that all the regulators keep undertaking on an ongoing basis. When the whole concept of small finance banks was brought in by RBI, probably the reason was this only, that let some new entities start small, and then as and when they perform, become some stable, see the strength in their business model. Some of them, depending on the corporate governance practices, business model practices, strength of their balance sheet and profit and loss, get upgraded to a full service offering bank. So that's where I think it is moving in. It is obviously going to be beneficial for the entities which will get upgraded. They will have a lot more flexibility in terms of carrying out businesses, and this should likely lead to improvement in their financials overall. So this will be a beneficial thing in the overall system.
Okay, that's the take coming in on the banking pack right now. Just seeing which way Trent is finally going to settle in, because a lot of volatility still needs some clarity on what those one-offs pertain to. Trend gap down 4%, recovered from there, and let's see where it actually settles. Around that 43.10 mark is where the stock is right now. But Kunal, on the charts, what's been your reading? I mean, sense of the volatility post the numbers just now.
Well, I think 4,000 to 4,400 could be a broader range for Trent, because after the move which we had seen post the previous result for the stock, it's gone through a very shallow kind of an uptrend, because it took a lot of time for the stock to scale past from 4,100 mark towards 4,250, 4,300 levels. It's just I think the last 1 or 2 days that there was some degree of momentum which had come back into the stock price. But after today's intraday correction and then a more of a flattish approach from the stock, I would actually believe that 4,400ish could be a near-term resistance for the stock price. And on the short-term side, we could be looking at 4,000 to 4,100 being retested again for Trent.
Okay, so that's about Trent, a lot of volatility. But the stocks which are reacting negatively to its earnings include names like SBI Card, HCL Tech on account of that weak performance, and even Mastech is a bit lower. In fact, we did speak with a whole host of those managements to try and decode whether there were some one-offs in this quarter or there is something which is expected to continue. Because, for instance, the HCL Tech management did allude to the fact that there is going to be a sequential dip of 2% in Q1. That's because of an adjustment of one of the large orders that moves to offshoring pattern. In Q2, there will be an impact of State Street. They are hopeful of a conversion of a lot of big deals in the coming 2 quarters, and that will aid the growth going forward. Listen in to what the managements of HCL Tech, Mastech as well as SBI Card told us earlier.
We'll get back on the margin profile and range that we're comfortable with, which is in the 17 to 18% range that we've always wanted to be in. So that's as far as the operating EBITDA and margins are concerned. As far as the revenue and growth is concerned, in dollar terms, right, we grew, like I said, 15.8% year on year. So we expect that even if you remove the small acquisition that we did in FY 24, we still grew at a fairly healthy rate compared to competition. So we expect FY25 to be along the same lines or potentially even better. It's a little bit tough to say. In the next 2 quarters, seems like customers are taking time. We had some impact in Q4 because of customer delays and ramp ups, but we believe the second half of the year will be much stronger for the industry.
The revenue guidance, we continue to remain quite optimistic about the opportunities ahead of us. From Q4 to as we get into FY25, some of the large deals that we won will move into a global delivery model, and that will have some reduction in revenue. Apart from that, we believe still we have a strong momentum in a lot of areas. Now, when all of that is also factored in with the macro environment, our assumption is will continue to be similar to what we saw in FY24. So factoring all that, we have given a guidance of 3 to 5%.
Question is really seasonality in one word. As you know, our software business has a peak in the December quarter, and that is how we were kind of near 20%. And our continuous guidance for the new year FY25 continues to be at the same 18 to 19% band that we had for the previous 2 years.
Okay, that's the take coming in from a bunch of IT managements which we had. Apollo Hospitals, that's the other one, wherein that fund infusion by Advent has not really gone down well. The stock saw a gap down and hasn't resurrected from there, still lower by about 5% or so. ICICI Bank, of course, is scaling the day's peak right now after the PAT was a decent beat, and clearly amongst the other private banks now there's stark leadership with ICICI Bank. It's closing in now on a 5% gain. 1160 is where that stock is, and AU Small Finance Bank as well, which seems like it's best placed right now for a universal license. That is the other stock which is actually holding out quite smartly. It's at the day's peak right now with a 7.25% gain. But Kunj, would you say, in terms of a segment, it's the PSBs where, there's sort of lesser margin for error, if you will?
So, as we all know, in the medium to long term, it's always the combination of the fundamentals and valuation, which gives a optimum combination of fundamentals and valuation, which gives a higher return possibility or a potential for higher return. Overall, public sector space has been getting re-rated now for close to 2 years. And when I say public sector, obviously public sector banks are included in that. Their private counterparts always used to trade at a premium to public sector banks for the reasons of their better margin ratios, better asset quality, and of course, better growth. Now, all public sector banks of late have been catching up on all these parameters, and that's where they are getting rewarded. There is still a gap in valuation. So to answer your question, yes, that valuation gap is likely to keep reducing more and more, and as a result, the opportunity is likely to continue to be there.
Okay, in the longer haul, of course, it has to be a mix of both PSBs as well as the private banking names. In fact, some of the key earnings came by, and here's a management reaction from both IndusInd as well as IDFC First. The CEO spoke with us earlier today.
We continue to maintain contingent provisions, and I think these contingent provisions have been maintained to take care of any eventuality on the microfinance business, which is a JLG business. We've always said that we will maintain 2% of the JLG business as contingent provisions and 0.5% on the MHCV business. We have to wait for the approval to come in and RBI to communicate for us whether the stakeholding for the IHL is increasing or not. Hinduja is not the promoter, IHL is the promoter for the bank. So that's number one. Number two, I think the bank is well capitalized as of now. Some quarters, if we go down, it doesn't mean that we will not stick to a guidance to 18 to 22%. The market reacts quarter to quarter. I think we are a long-term annuity business, and you have to look at us as long-term.
To maintain that, in any case, it's a need. If anyway our bank has to fund its growth, we want to fund it all with deposits. We don't want to borrow anything. And to top it up, we also need to pay the legacy bonds coming up about 7,000 crores or 10,000 crores is coming up for repayment this year. The profitability sense, think of it like a, first quarter could be flattish, second quarter could take off, but Q3, Q4, we are expecting at a PAT level, the bank should start posting really handsome profit. Let me say 4-digit will be achieved by the bank is what we feel, and probably by a margin.
Okay, point taken. The commentary coming in from Trent right now, and they say that we see Star as a key and additional growth engine in our portfolio going forward as well. They talk about how margins are pretty much stable for the Zudio business. So they say that the margin profile of West Side as well as Zudio continue to remain consistent. They talk about the store additions that they have done. And they also say that in the fashion concepts, they registered like-for-like growth of over 10%. And that's something which is now being liked by the street. We have the stocks in we have the stock which is right now in the green. But time now to take the BTSC trades. Naresh, you go first.
So first is a buy on PNB. The stock is close to a breakout. Stop loss at 136, target of 144. Second is a buy on IOC. The whole OMC pack is doing well. A short-term breakout done on IOC. Stop loss at 175, target price of 180.
Right, okay. That's, the BTST trade coming in from Naresh. Kunal, what about you?
So I'll go back to banking names. Federal Bank is the first one which I believe could close in the gap the stock had created almost a month out back when the stock had fallen down from 162 odd levels. So would suggest a buy with an expected target of 170. Stop loss to be kept at 155. And Axis Bank is something which I recommended over the last couple of days. Looks attractive even at current levels of 1160. So would revise the targets higher to 1210. Traders could look at a fresh buy with a stop loss at 1135.
On the slightly medium-term charts as well, Kunal, does it seem like ICICI Bank and Axis Bank are going to be in pole position within the private lenders?
Yeah, so far they're looking attractive. But, I think, we've not seen any major sector run where the other larger cap names, they would probably, lag behind by quite a distance. And I think we would even eventually see the likes of HDFC Bank, maybe Kotak Bank or IndusInd Bank making a strong comeback. Now, which comes out first, I think, is very difficult to anticipate. But I would believe that so far, ICICI Bank and Axis Bank are the two stronger ones.
Okay, point taken. So that's a view coming in on ICICI Bank and how the setup is looking like. At this point of time, we have clearly started the week on a positive note. 22,600 is back. It's an important week with respect to the Fed outcome, which we are expecting. Truncated week, and we'll get the auto sales data as well. But talking about autos, they have been pretty much out of favor per se in the last few weeks. We haven't heard much about them either on the upside or downside. It's been largely about banks, financials and IT, which has been making a lot of headlines. Naresh, any of the auto names that you would want to recommend perhaps as a buy or somewhere where you suggest profit booking?
So the new name which has broken out is Ashok Leyland. Extremely sideways for the last 1 year. Every time it went to 150, 170, bounced back. Every time it came back to 185, 190 has drifted lower. Day before we saw a very strong volume bump up. It has recovered well over the last 1 week or so. So once it sustains 190, that would be a much longer term breakout of 1 year. And then it could head up slowly and steadily higher. So the current breakout, which looks interesting in autos, is Ashok Leyland.
Let's analyze and delve deeper into what Trent's numbers are before we mark the closing for the day. And Somit is here to break down the numbers for us. Somit?
Well, for Trent, if you see the numbers are pretty much ahead of what the street was expecting on a YOY basis. If you see the company's revenue has yet again grown above the 50% mark. Net profit did have an exceptional item because of the change in accounting policy. But if you see the EBITDA number, that has come in at around 477 crore, a growth of nearly 125% on a YOY basis. But what is more important here is it is 50 crore above what the street was expecting. Street was going around with a number of close to 420 odd crore rupees. But the company has reported an EBITDA of 477 crore rupees. Now, if you see, the company has been continuously growing at over 50% CAGR since 2020, and one of the major reasons behind this was store addition, and store addition has yet again surprised the street in the fourth quarter as well. In the fourth quarter, if you see, the company has managed to add nearly 12 West Side stores and around 65 of Zudio stores. Now, street was going around with a number of around 32 store additions when it comes to Zudio and around 8 store additions when it comes to West Side. So that is one of the major reasons why we are seeing such kind of a beat when it comes to Trent. Now it remains to be seen whether similar growth can be continued by the company even going forward, given the fact that the valuations are very expensive and the share prices of Trent, if you see, are trading literally at the level at around the highest target price that is there on the street. So whether there will be upgrades or not post this kind of a number remains to be seen. The company will be holding its conference call and tomorrow we'll get the notes post that with upgrades as well or not. That remains to be seen.
Yeah, that remains to be seen for such a performing stock. But Samit, thanks for that analysis. Let's begin winding up for the day. And we're closing in pretty much at the highest point, 22,700. Pretty much start of the new series. Not looking bad in the futures. 187 points higher is where we're shutting shop for the day. Everything from an AU Small Finance Bank, which closes in with almost a 7% gain. ICICI Bank, which has really shown leadership today after those numbers. 4.5% kind of gains coming in on ICICI Bank. Axis a near 3% move. SBI a 3% move on the futures. Even HDFC Bank participated today with a 1.5% uptick coming in. Look at Bajaj Finance and Kotak as well, because the beleaguered names from last week, they also saw a rebound and have participated today. IndusInd Bank as well in the green with a good 3% move. HCL Technologies clearly not. Almost a 6% downtick is what the stock closed the day with. I'm going to see what Maruti as well has done after its numbers disappointed the street. 0.5% of a downtick is what Maruti has closed the day with. Bright and lively for the broader markets as well, wherein AB Capital, Naveen Fluorine, LTF, they've all held out very well. And I think that was the case with the Yes Bank and RBL as well. But that's pretty much it for the day. We'll see you again with the market action tomorrow morning at 8 a.m.
If you like this video, then like, share and subscribe to ET Now.